right. Well, welcome to the next episode of the Next Level Digital Podcast. I got David Schwartz with me out of Florida. David, appreciate you joining.
My pleasure.
Just real quickly, do you mind introducing yourself, telling everybody a little bit about what you do and
Sure.
where you're doing it
My
from?
name is David Schwartz. I've been in the mortgage industry for 26 years, June of 1999. I'm a mortgage banker by trade, but I've over the years moved up the chain a little bit and decided to manage loan officers as well. So I'm what they call a producing manager. And so that's a little bit what I do. We do residential mortgages and I do residential mortgage sales.
Okay, cool. So you're still writing yourself at this exact moment, or are you only managing loan officers?
Yes, both.
Okay, cool. How many loans a month would you say that you write personally and your office?
That I close or that I write?
Let's go close.
8 to 12 loans a month, depending. An average.
That's pretty good.
8 to 12.
Nice. And what's your average price point? Like what kind of how big of loans?
My average loan size, because I'm doing New York City mainly, and I do a lot of FHA and VA, which is either 3.5% down or 0% down. So I'd say my average loan size is around $700,000.
Man, a lot higher than I'm out here in Vegas, so that's a lot higher than average median sales price out
Yeah,
here.
my average loan size is extremely high, and my units are very low versus my loan size.
Would you say, right now, real estate's super polarizing. Everybody has an opinion on real estate and whether it's going up or down. What's the current trends that you've seen in real estate on the loan side? I know New York doesn't encapsulate all of America, but what are you seeing on the loan side right now?
Well, I'd see on the real estate side, which affects the loan size, is affordability. The number one issue I'd say right now is affordability. So what's happening right now is that rates are not coming down. The rates have stayed elevated, but the issue is that the prices have not come down, and I don't think that they are coming down even if rates come down, because at the end of the day, people are locked into 2.75 and 3.5 or 4% interest rates, and they bought their house and they have a lot of equity, and that doesn't mean that they want to sell, because they know if they do sell, then they have, what are they going to get in return? And so most people are not selling. The people who are selling are either have enough money to upgrade, or they're downsizing, and that's affecting the mortgage industry because there's just less volume because of it, and it's made it a lot more difficult. Now, at the same time, there's a lot of people who left the mortgage industry, so when they say it's picked up, it's picked up because there's just less loan officers around, but that's what I would say the temperature of the real estate / mortgage market is.
Yeah, when I bought my first house, I think I got a 3.7 and then refied at a 2.5, and it's like, man, just never probably ever didn't let go.
House, and how much did you buy it for?
Yeah, that house was $350, and now it's probably worth about $580.
Right.
Little bit of a bigger house.
What's your balance of your loan? What's your loan size balance?
We bought it at a 30-year. And
no. What's the balance? How much you have left over on the loan? How much money do you have left over?
180K.
Oh, so you paid down 180K already?
Yeah. We paid down pretty aggressively. Well, the reason it's paid down so quickly is the first year or two was a 30-year, and then when we refied out of 2.5, we were able to keep the payment almost exactly the same, and we brought it to a 15-year.
Yeah, I did a 15-year in one of my properties too. So you have 580. So let's just say you pay real estate fee and taxes and broker fees. So 550 minus, let's say, a payoff of 180. So you have a $370,000 down payment. So you're going to use $370,000, right, to get pretty much the same house. And with the rate being elevated, you're pretty much going to have the same payment. So why would you do it?
It doesn't make sense.
The issue that we're dealing with right now.
Exactly. The only thing that would make sense,
take that 350 and afford a higher payment, and then maybe get a house for 750, and that's going to suit your family better. I don't know. That would be the only thing.
Yeah, either that or downsize. Downsizing is another option, but a lot of people aren't going to downsize at my age. They're going up, Yeah. And yeah, man, I appreciate that insight. A lot of people are struggling right now. I'm sure that's widely known, and buying a house right now affordability is absolutely through the roof. It's probably the worst crisis I've ever seen. I've been in real estate myself personally for I think it was 9-ish years in corporate. So I was buying, selling a lot of homes for a large REIT, and I haven't been in real estate in a while. So I love real estate. Love the entire industry, loans as well. So Without loans, people can't buy houses. I guess right now in your industry right now, are you guys growing right now? Or are you guys kind of stagnant? Are you guys just treading water? How's that look for you guys?
Well, overall, year over year, we were in a trajectory to go up in volume with the same amount of loan, the same amount of sales people. We did change banks recently. I was with one bank for 16 years. I just changed banks. I was at the Federal Savings Bank. Now I'm at CMG Home Loans. And CMG is looking to build their brand in the 5 boroughs, which we didn't really have much of a brand there. So because I had a little bit of a presence there, they brought me in to try to help build that. So overall, because the company is good at what they do, they are attracting and building, and our trajectory is going up because of that. But I don't think the overall business, the trajectory is pretty much the same because the volume is what it is. So the answer is the same.
Treading water then. Have you guys done any creative stuff to try to get new business? Like, have you guys ran into any dead ends? Have you guys had any fruitful endeavors for trying to grow the business? I mean, what can you talk a little bit about that?
Sure. So one of the things is that I had created a website called the Veteran Team. The company has invested money in me since I came to help me create this website. I do a lot of business in the military community. And I also do business in the hero community. Heroes are considered first responders, teachers, nurses, police force, firefighters, and those all fall into the category of heroes. So the Veteran Team website, in case anyone is listening at CMG Home Loans, services military and heroes, which I just listed. So I'm kind of going after that market. The military is good because of the fact that I have a great, it's a very tight market in terms of, people knowing each other and referrals. So once you get in, you get a lot of referrals because people just know each other. And that is it's just a great niche that I've been really working on. Things I wanted to do based on the market being tough. And these people are very motivated to buy. There's a couple reasons. Number one, no money down. Number two, even though you're putting no money down, there's no PMI. Number three, it's much easier to qualify for a loan. With the rates being elevated, your debt to income ratio for a conventional is maxed out at 50. FHA is maxed out at 55. VA can go up to 65 debt to income ratio. And a lot of their income is non-taxable. So that means that even though the income might be on paper $50,000, the bank might raise that by another 125% because it's non-taxable income. So there's a lot of things that military. And then the other categories, because I have a lot of experience with them, they also have good 401ks, they have good jobs. So I'm really targeting a market of people that are able to buy in this market, and also a tight-knit community that has the ability to refer. So that is what I've been doing. I've been doing it for the last couple months. I'm not a patient guy, so it's not going as well as I'd like, but from my understanding, we're getting someplace.
Where does your traffic come from? Are you running paid ads? You doing organic? You doing mailers? Like, where are you getting your traffic from?
Couple things. So number one, realtors was referring me a lot of business, but because realtors are overall slow and there's different pockets of where people are doing well and not. So that would be number one. Number two would be building up these clients, and through these clients, I've been placing them in different houses, and that's how I get my business through the Veteran Team and through building that brand. And number three would be starting to figure out how to use these different websites that can go and put ads out for me, and then have an AI tool to come help follow up on the leads, try to go through them, since there could be a lot of leads coming through. But I haven't really done the last part yet. But that's one of the things I'd like to start doing, which is the Facebook ads the thing is like this: I don't have the manpower or want to put the time of the manpower towards going through all those leads. So I would want something or someone or AI, possibly, if that makes sense, to sift through all those leads, and that would be the third way. That's the new way of getting business, and that's what I want to focus on.
I got you. So right now, you said you're hoping to get a lot of traffic through. You're trying to get AI to handle most of the front end stuff, and then you're gonna have closers, you, for example, on the back end, closing out the deals, handling the people that are actually interested after. You're hoping for AI to filter through kind of like the junk at them. Is that kind of what your hope is?
Yeah.
what systems in place do you have right now? Like, what are you using, a CRM? Are you using spreadsheets?
Yeah, I'm using a CRM, but I'm doing really more the old school, just following up with clients. I don't have a great CRM where I'm getting tons of leads through. I have to manipulate that. I'm doing it like by doing talks, trying to put some webinars together, just following up with realtors, just that old, the good old way. In terms of getting massive amount of leads, no, I do not have that right now. And that's what I want to work towards to try to figure that out.
I see. What's your like biggest time waste, like on a day for a loan
Talking to
officer?
clients that aren't qualified and keep me on the phone for like an hour, or working on a deal that's already been worked on and I have to figure out how to get the closing scheduled, and that takes me away from doing important things like this, which is exploring possibilities of how to grow my business.
And right now in the loan industry, I mean, is the attrition rate of loan officers like through the roof? Are people leaving the industry like no tomorrow?
I'm not sure.
Not too sure.
I don't know. I mean, so far no one's left in my people have been busy enough not to leave, but for sure, I mean, if anyone's listening to this, my assistant is going into full-time sales. So I'm looking for in New York area, an assistant willing to pay up to 60, maybe 70 if they're worth it, 70,000 salary, plus they would get some kind of commission. So they have the ability to make over 100,000, minimal mortgage experience. I'm looking for that. If anyone's watching the podcast, can reach out to me. 917-744-2875. That was my advertising for the day.
Love the plug-in. That's pretty good salary for an assistant for the mortgage, especially right now. I would never have thought that. Yeah, for sure. I'm just saying, like right now with the current landscape of everything, I'm surprised to hear that. Yeah, there's still that much demand and the pay would be that good for an assistant. That's pretty good, man.
Well, the upside about the assistants and the same assistant that's going to go into sales full time is I helped him make connections, and then he's going to use those connections to build up his sales. And then that person would come in and I would build them up the same way. So it's really not just the now, it's the future of someone who, let's just say, needs to, have contacts and make contacts without just sitting around cold calling all day, which is not going to get you too far in this business right now.
Yeah. Well, let's wrap this up real quick, and I guess just some closing statements from you. Do you have any tips for somebody getting into the industry as a loan officer? Like, any suggestions?
If you're coming in as a loan officer, I would say that you should make sure you link up with someone who is going to guide you, give you some good understanding of the business. If you're looking to get leads, make sure that those lead sources are vetted and that you look up and you feel good about, if you're going to be going to a company that's promising you leads, just look into that a little bit. And overall, just keep on pushing. I've been doing this for 25 years. I'm getting a little tired of pushing, but if you come in with a positive attitude and you're willing to put in the time and understand the business first and then make the phone calls, you can be successful.
Love it. Well, I appreciate it, David. I'm pretty sure anybody watching this, if they're alone, thinking about getting the loans or being a loan officer, I'm sure they're going to appreciate that advice.
Sure.
All right, cool. Well, thanks, David. Talk to you soon, man.
No problem. Thank you.